Eric Muathe with Muathe.com with US market analysis for the weekend of June 17th and June 18th, 2017. Let's take a look at markets here. We begin with the Nasdaq, and we got a shallow pullback this past week. Let's call it about 0.9% down. But if you take a look at the charts, really we haven't seen a major break. For example, on the Nasdaq, we haven't seen a break of this trend line on the weekly. So that, we can say yes, markets pull back, but really we haven't seen anything that would cause anybody to start running away. Maybe at some point, if we break below such a line, a break below there, might start asking serious questions about the market's intent. But right now it's trading back above the 10-week moving average, or let's call it the 8-week moving average on my charts. So that's okay. It's a nice decent pullback. If we take a look at 3 years of weekly data and go back to the line that was the previous resistance line, so this line was resistance until we broke out at the beginning of 2017, which is this breakout. We haven't looked back since then. So we've been extending this line, and we can see the market has bounced on this line before, off the lows here, before going to fresh highs. So you can see that until we also break this line, this market continues to be net healthy. And of course, we know that if we come and test this line and break below it, that would be a short-term, if not a major sell signal. If you take a look at the Nasdaq hourly going back 6 months, and here I am using RSI setting of 26 for my hourly and 30-minute charts. What you can do is draw a simple line connecting the lows for 2017, and the market's been responding nicely on this line. You can see here support on the line for the lows there, support on the line for the lows here, and again support as of sometime late in the week. We held that line there for the lows there. So hour to hour, the market still continues to be healthy. If we take a look at the 30-minute chart, we can see that the highs for the last couple of days came when the market came back to test the break, recent break here, brought the market lower, or at least the Nasdaq, and we tried to move above that level there. We were rejected, as you can see, which corresponds with the highs there. We are down since. But when the market came down here to test the lows, it held this line. As you can see, good support on the line there for the lows here. In other words, on the 30-minute chart, we are stuck in a wedge. We got bottom side short-term support holding the market, and you got top side resistance. At some point, the market is going to have to decide short-term whether it wants to break out or whether it wants to break down below that wedge. Now, one characteristic of the market lately is that pullbacks have been very shallow and quick, and that is characteristic of what we've been talking about for many months, that as long as markets are holding above the 69.1 threshold, so as long as markets are trading above 69.1, expect the market to be trading with a bias to the upside. So that has been the case. Markets, or the Nasdaq's been holding above 69.1 for most of 2000, if not all of 2017. You see something that happened also here. We see a good example between 2013, mid 2013, and the market would stay and held above 69.1 until somewhere here, which is almost 2 years later. So, and of course we had pullbacks, but the pullbacks were always shallow. Ultimately, the market had a nice run while the RSI held above 69.1, and for now we continue watching the Nasdaq continuing to hold above 69.1, which is a sign of a stable to bullish market. If we take a look at the Dow continues to trade very well. In fact, this is week number 4 after breaking out. So we see back to back to back to back weekly gains. That's a very good breakout setup there. And the level that the market cleared and has been staying above on the Dow is 21,006.94. Now the reason why I give you this number is at some point, should we violate this to the downside, that would be telling us that the market has run out of momentum. So we need to keep watching this line, set some alerts, because anything below this price would be bearish. Right now the market is doing exactly what the bulls want the market to do, breaking out successfully and following through for 3 straight weeks. We can also see here that the weekly for the Dow continues to hold above 69.1. That's a sign of a good market. And as a good example of this is, ever since we jumped above 69.1 in December, which is this period, the market stayed positive until it moved back below 69.1, which is somewhere here. So as long as the Dow is holding above 69.1 on the weekly, that's another strong bullish indication of intent to record higher prices. If we take a look at the Dow ended at fresh daily closing highs. In fact, let's zoom in to see how that has played out. And we can see here again, fresh all-time daily closing highs for the Dow. And the last legitimate breakout was here. And that level that we were watching and the market broke out was 21,206.29. And again, as long as the Dow is above that price, that daily breakout continues to be in effect. At some point, should we crack and break below that level, that would be a bearish sign. So we need to watch this price level, set an alert, because at some point, should the Dow breach this line by going lower, then that would be a tell of what the market's intent is. Short term also on the daily, let's watch this level here on the RSI. Should the Dow move above 69.1, expect a continuation of this current run. And if the Dow is rejected when trying to move above 69.1, that might also be a sign of a market that is running out of momentum. So above 69.1 is good. Rejection when trying to move above 69.1 can be a sign of a market that is getting tired. And of course, on the monthly for the Dow, let's not forget the Dow has been holding above 69.1 on its monthly RSI since about December of 2016. And that might explain this explosion, gradual uptick in the market. So as long as the Dow is above 69.1, again, expect shallow pullbacks and ultimately the market to continue trading well to the upside. Take a look at the S&P 500, and here we've also seen a good breakout, and we continue holding above the previous weekly closing highs. In fact, for the S&P 500, we had a good breakout and a great follow through. That's what you want to see for quality breakouts. And the level we're watching there was 2399.29. Now, after 2 weeks of rest, since recording the current all-time weekly closing high at 2439.07, now we can break out again. We've had 2 weeks of rest, which is the minimum requirement. So if we see the S&P 500 clear this price, this is an indication of even higher price levels. Also, we need to watch the weekly RSI in case the S&P 500 moves above 69.1. I would expect that to suggest that we are going to break out and continue trading higher. The more we pull back from this level, the more we are rejected, the more we fail to break out, then that is when we might start looking for more evidence of potential downside. But right now it looks like the S&P 500 is doing exactly what the bulls wanted to do, which is behaving very strongly. Here it has a chance of trading above 69.1 and also has a chance of a fresh weekly breakout above 2439.07. And also we also know that we need to set an alert. Should it crack down below this price at some point, the previous breakout, breaking down below that price would be a sell signal. And of course, S&P 500 continues to trade above 69.1. Again, check the description of the video if you want to understand where I get this number. It is actually a variation of 1.618 or 61.8%. So check the description. I'll have a link that describes where I get this number. But you can also see here S&P 500 did trade well between 2013 and 2015 for almost 2 years. It stayed for the most part above 69.1, and here we can see shallow pullbacks, but ultimately we had a major run in the market. So here we see potential for the same exact thing as long as S&P 500 is trading above 69.1 on its monthly time frame. So let's conclude here by taking a look at the Dow hourly, and the Dow hourly is within a wedge on the hourly and short term. We are going to have to wait and see whether the market decides it wants to break out and continue advancing higher, or maybe we break down below the wedge and put some downside pressure on the market. But don't expect too much of a change in terms of how the market's been responding to pullbacks, because as long as the Dow, the Nasdaq and S&P 500 are holding above 69.1 on their monthly RSIs, this is a strong market. Oh, and by the way, if you want my recent world market analysis, take a look at the links in the video description where I discuss some world markets like Hong Kong. I discuss the KOSPI, the French market and the Australian market in this video. Check for the link. There's also another video that I made discussing the Nikkei, Canadian market, Swedish market and the VGK. So check the description for this link here. And also you can check out by logging to my website for part 2 of last weekend's market analysis video, where we discuss lots of ideas and commodities. It's about 40 minutes worth of analysis. And for subscribers, be on the lookout for part 2 of this weekend's market analysis video. Otherwise, it's Eric Muathe at Muathe.com. As always, good luck, peace, and blessings. Enjoy the rest of your weekend. I am out. Yeah.